Yeah, thank you very much. And a very warm welcome this early in the morning. I think last year we were a few people more, but this was the afternoon session. So I was wondering how many will show up. So pretty great to see all of you here. AI-powered algorithmic trading. We are here at an AI conference, so this might be timely. I know algorithmic trading is also a topic that is kind of appealing to many people. For me, just yesterday I was at an office building of LSEG here in London, and they still have kind of like this podium, right, where they ring the bell, but it's more like a ceremonial thing. It's not on the trading floor anymore that they signal that the trading is gonna get started. The algorithms get started trading no matter whether somebody is ringing a bell or not. Right? This is how far we have come. Therefore, if you want to participate in the market these days, might be a good idea maybe to rely on technology as well. All the resources that I'm going to use and I'm going to show that I might adjust during the session are found in GIST. You see here the short link, so it's bit.ly and then /ODSC LDN 2023 with the 2 underscores there. There you find, again, notebooks, Python scripts, whatever I'm going to use, whatever I'm going to show is either already there or will be put or updated in the gist. Just give you a few more seconds. If you have trouble finding the page, just let me know. You can always jump back to that slide. Right. Yeah, that's the agenda that I've planned for today. A brief introduction, what we have been doing in the field. Then I want to briefly talk about data-driven finance and how far we have come in finance. I have here reference to a Medium article which is about algorithmic trading with 100 lines of Python code, actually quite a bit less. Then about the trading platform that we're going to use in the form of a demo account, which is nevertheless fully fledged. And this is something that you not find with every broker, every trading platform out there, in the sense that they have a demo account which you can use, for example, to get started in the field with paper money, right, do your paper trading. And if you then want to change to a real account that you fund with real cash, real money, it's basically the very same infrastructure. And this is something that is still these days hard to find. Once we have done the setup, which means to have created an account, to have created access token, then we have everything together to go through the case studies. And again, the resources, the notebooks, the Python files, etc. that I'm going to use are all in the gist. There may be a few words at the end about the AI machine because this is to be seen in the context. Before we get started, just a few questions for me to set the frame a little bit. Who is programming Python regularly, maybe on a daily basis? Almost everybody, so this was the Python part. So I forgot to show your hand. Who has done trading in the markets already? Almost all. Who's done algorithmic trading based on some automatically executed strategies? None yet. So I think that's actually, I would say, an ideal situation. Almost everybody has programmed, seems to be at least intensively Python. Almost everybody has done some trading in the financial markets. And now this is then a good point to combine the two skills and the two backgrounds, if you like, programming plus trading. Wonderful. So I'm pretty sure we get to the goal that I've set for today, that everybody sees live and in colors, as they say, the strategy up and running. Brief introduction. I want to skip through that. We are the Python Quants, as the name says. We are concerned with quantitative finance by the use of Python. Of course, when I say we do Python, this means, of course, a bit more technologies around that. But at the core of it is Python. If you like to boil it down, what we do at the core is we teach primarily people how to use Python for finance. Since quite a few years, we have a comprehensive training program with hundreds of delegates that try to master the skills that are required these days, let's say beyond Excel in the finance domain, in order to cope with the large data sets and the different types of data these days that are so relevant. The iMachine is more or less, let's say, a platform which does in a systematic way, in a standardized way, what we are going to cover today from scratch, with some interactive Python code as well as with a couple of scripts here in a platform sense, which is of course a little bit larger from the code base and does quite a few tricks more. But overall, we are going through all the different elements that we have implemented here on a much larger scale. For those of you who are interested in where I'm coming from, what I've been doing here, the longer text. The books I've published here, Financial Theory with Python, that's basically the entry point. That's the fundamental book. It's also I would say the smallest, the shortest one, some 200 pages. This is the thickest one, 710 pages. This has been translated in many languages. And what I'm pretty happy about, when I started using Python for finance, it was no topic at all in the industry, right? And now these days, when people do their bachelor's or master's, they are supposed to learn Python for finance already. So it's used, particularly that book, around the world at many universities and in many programs, which makes me even a bit more happy than when professionals use it, because getting the younger generations into the field is, I think, pretty exciting. My background personally, my PhD is in mathematical finance, and this is closest to what I've been doing in my PhD work back in the days. It's about derivatives, pricing, hedging, but of course you see the subtitles here always with the Python twist. But these books don't teach Python, they just use Python as a tool. Closest to what we are going to cover today is the book on the left-hand side, Python for Algorithmic Trading, from idea to deployment. So we are going, if you like, in a fast-forward manner through the different chapters, from the very first steps to the deployment. Maybe not in the cloud, we are not doing some cloud deployment, but this will be just another next, I would say, even tiny little technical step that will be required. AI in finance, of course, also an important topic, but this was published well before the LLMs have become so popular. Right here, I see a couple of translations of my books from the past. There are quite a few more these days, also in Polish and Russian, and I don't know, there are quite a few, which makes me, of course, happy that the topic has become, in and of itself, we can say a global phenomenon. For those of you who are interested in getting in touch with others from the industry or from the community, here a Discord server with currently some 850 plus members, mostly quant developers and researchers, also academics, students, delegates from our program that exchange ideas, where you can ask questions, where events are posted, where other resources are posted. Here you see the short link to the Discord server, bit.ly/quants_dev. Just have a look at it. I personally haven't recently not been that active, but I'm planning to get back into it. For example, last year we have done a whole webinar series on reinforcement learning in finance, for example, which is also on my own YouTube channel available. Data-driven finance. Also, just a few words to set the stage for what we are going to do afterwards, because without data, nothing works anymore. When I got into finance, my studies and later in my PhD work, actually, it was kind of, I would say, a theory-driven instead of data-driven. I recall even instances when I needed a tiny little data set, and I walked to another professor at another department and was asking for something, get it on my diskette, right? And needed to pay 20 Deutschmarks back then for a single time series. We have come a long way, right? And it also tells you that I'm quite old. These days, even students have at no cost, or at least at very, very low cost, data available that was unimaginable back in the days. And in particular, when you think back when quantitative finance has started at the early 50s, 1952, Markowitz's portfolio theory, right? Over the 60s, 70s, 80s. We have been decades away from data-driven finance, but now we are there, right? Not too many people read the newspapers anymore, so I'm still missing it. When I boarded the airplane yesterday, I'm still like inclined to grab my newspaper, but not even the airlines or the airports you get. You need to pay for it, but it used to be all free, right? That you get your newspaper when you board an airplane. I think not too many people have even a subscription anymore. What they make their money with is with the digital versions, right? So you don't need to wait until the next day until you get the news delivered to your doorstep. You simply have a look, let's say every other hour, and you see what's happening, and at least to keep informed. But of course, the professionals since decades, we can say, sit in front of the terminals. Here's a workspace from Refinitiv, Bloomberg terminals. There are a few more, but these are the two largest providers. And when you're interested in something about Apple, of course, you get it here in a single spot, and you can drill down basically into every detail that might be of interest to you. But I think this is overwhelming, even for the most sophisticated and most experienced and well-versed people out there. What kind of data you think in terms of maybe the 3 V's, as they say, the volume, the velocity, and the variety of data that is available. We as human beings, we simply can't keep up. So we need the machines, we need APIs, we want to access the data in a more systematic way than just like clicking and drilling down and getting back and making notes and whatever. Here you see one example for Apple about tick data. Apple went public 1980. So when you think in terms of end of day data, you have roughly 250, let's keep it simple, 250 trading days per year, times 10 is 2,500, times 4 is roughly 10,000, so a few more, let's say 11,000 end of day data points. Closing prices, let's say for the Apple stock, and here you see for half an hour, you have more than 40,000 quotes in terms of tick data. This is how far we have come, right? And when you have a look at the financial theories and the financial books out there still today, everything is basically based on the end of day data version of the data, and not that much on the new world, the new data-driven world. And for the machines, no matter whether there are 10,000 or 40,000, 400,000, 400 million, 4 billion data points, usually today's machines don't have a big problem in processing these data points. But we human beings, what shall we do with 41,000 data points, right? And then we come to the unstructured data world, news, financial reports, social media, whatever. There's so much to process, and here's one example about Apple again, around an Apple event that was happening there, and you can imagine when Apple, just like a few days ago, they had another WWDC event, and of course there's a ton of news that is coming out. Most of the stuff redundant, but nevertheless, if you want to go through all of that, you probably don't want to read through it, so the machines help you with that. That's for sure some benefit that we have here. But we need the machines. We as human beings usually can't do all of that anymore, read through all of that, right? We know we have now GPT-4 and whatever we can leverage in this context to provide us with summaries and other techniques that provide us with sentiment scores and whatever we might be interested in, which we as human beings can come up with. Of course, technology is required, not only some piece of hardware, also the software, and fantastically in the Python ecosystem, we have it all together. We have it all for free. That's wonderful, and I think it's also in a very powerful version what we get, like NumPy, Matplotlib for visualization, pandas. There are of course alternatives. Let's say for Matplotlib there are alternative libraries such as Bokeh and cufflinks with Plotly in the backend, etc. But there's a selection, and these are the tools that I primarily work with. Keras as at least for me, preferred front end to use TensorFlow still these days. Right? So the Medium article, if you want to have a quick run through algorithmic trading here, is it says in less than 100 lines of code. There is, when you have access to the slide deck, which is via the gist again, there you find the link. You can click on it, and there you find code, a little bit of background information. This is how far we have come technologically, right? We don't need, let's say, the biggest machines out there. We don't need a million lines of code to get active in the field. It has become, an area with pretty low barriers of entry. So when you, for example, read the book, which is still today a good read with quite a few lessons about long-term capital management and the blow up in the end. Right, there is one part where they said, and then Meriwether set up shop, and the first thing that he did, he bought computers, machines for $10 million in order to get started crunching the numbers, connecting to the markets. It's not $10 million anymore. So every machine that we have here in the room is good enough, and if that's not good enough for whatever you want to do personally, you can fire up a cloud instance for a couple of US dollar or pounds or euros in that sense within a minute, and can scale that easily. This is what we have these days. No need to invest millions. I'm not saying that there are no companies anymore that invest millions out there in hardware, high frequency traders, etc. For example, they play a different game where hardware plays the primary role. But what we are talking about here, let's say alpha seeking, algorithmic trading on a retail level, to even further boil it down, doesn't need more than a portable notebook and a few lines of Python code, and maybe a few of these packages that we have here, but they come within seconds via a simple install command. If you want to get more background information, I think these two books are pretty interesting reads about the history. A Man for All Markets, about Ed Thorpe, one of the first, right? He became well known for blackjack, playing blackjack and beating the dealer. So this was one of his first books, Beating the Dealer, and then Beating the Markets later, the second one, and here his biography. And then the second book, which is also quite recent, about Jim Simons with Renaissance Technologies and the famous Medallion Fund, which is closed since quite a few years, consistently outperforming the market since decades. Pretty interesting read, at least from a high-level perspective, what is involved in systematic algorithmic trading, what they do, and I think if you're interested in the field, that's maybe you want to listen, like I prefer often to audiobooks as well. So when you go for a run, it's also a good thing to have on your iPhone to listen to. Now coming to the trading platform, before we can apply the 100 lines of code, or how many we are going to deploy today, we need a trading account. And I basically since years, I don't know since how many years, we are using Wonder O&A. I prefer still to say Wonder. Some say O&A, which is basically here a London-based, a UK-based broker with subsidiaries in other countries on the continent. I think now they are in Poland. And they have since years, from my point of view, and from a technological point of view, the best API for retail traders that you will find in the market. So there are other brokers which have a completely different, much broader product spectrum that you can trade. Let's say, for example, interactive brokers. They are like the leading retail broker, and they are also big in the institutional field, but their technology and their API integration is, from a technological point of view, lagging years behind of what you will get here. So I would say, as a retail trader, product shouldn't come first. So I always get emails, I want to trade X, Y, that. Let's say I want to trade these stocks, I want to trade options, I want to trade future, I want to trade whatever comes to mind. How do I do this algorithmic trading wise? And I said, well, it's not that simple to trade options algorithmically, apart from what is involved from the financial side, but rather on the technology side. Here we are limited with O&A. With regard to the product spectrum, it's very limited, but the technology, I would say, is currently the best still that you can get in order to get started with the technological aspects of algorithmic trading. And I think if you want to learn to trade algorithmically, it should be okay and good from the tech point of view and not necessarily from the product point of view. Also, what they offer primarily are FX instruments, and FX instruments from trading point of view, algorithmically, have a couple of advantages, at least that's my opinion. If you want to trade stocks and you want to trade long and short, that's not that simple and easy as trading FX long and short. In FX, it's a symmetric market, right? So either you have the one side or the other one. You can easily short, right? You can easily leverage if you like to do that. With other products, that's far from simple to implement, right? Therefore, Wonder O&A, I'm not saying you should open an account and trade your retirement funds there. This is not what I'm saying. I also get nothing that I recommend them, but we use the demo account since years for teaching, and they are, again, from my point of view, the most simple ones and the most advanced ones in order to get started in this field. And also one of the advantages, I was referring to this new world of data-driven finance before, you get, even via the demo API, you get access to their full data set down to the 5-second bar level, going backwards like 14, 15, 17 years, depending on when the product was launched. With other providers, let's say again interactive brokers, you need to have additional data subscriptions on top of having an account there, right? So now the sales pitch has ended. The next step is, if you want to follow along what we are now going to do, you should go to onda.com, wanda.com, and then in the upper right hand corner you find the link here. Maybe it's noteworthy to highlight that one, right? This is how they make money, right? That 75% of the people, 76.6% of the retail investors lose money. Right? That's part of the business model, and here on the upper right hand corner you see the try demo link, and this is what you should follow along. So you should click on the try demo one. This brings you to the registration. I might be logged in now in one of my accounts, so could be that it's now for me not working because I have an account open here. Yeah, you see here, it redirected me to one of my accounts because I have the trade app open. So for you, if you don't have one account with Wanda open or are logged in so that there are cookies on your machine, the form should look like this. Right? And I would, in any case, I would go with the United Kingdom here. So no matter where you live, so I'm from Germany, if I would open an account, I would also go with the United Kingdom, because things have changed, and sometimes you go through the application process and then they say, yeah, sorry for your application, but we are not active in your country. So for the demo account, I think it's okay to go with another country. If you would like to open, maybe, I don't know, later, a real account, of course, this wouldn't work anymore. They would require your ID and whatever for the know your customer requirements. But for the demo account, create your demo trading account, you should go with the United Kingdom, and then after basically a few more details, you should be good to go. Let me know if you face any issues. Let me also know when it works for you. Yeah. Are successful. You can't be successful. You don't have a machine.
No, I've got a live account.
You got a live account. Yeah. Yes, a little bit. I must say, I'm quite a bit disappointed they changed the legal structure again on the continent for the second time in like 24 months, and the technological integration, which used to be the same as here with the account, doesn't work anymore. So I don't know. I was just emailing them. I mean, I don't care about the legal entity which manages the stuff, but if they change the infrastructure for certain groups of customers, I don't know. Does it work for you? Did you go through it? Okay, right. Everybody else as well? Just let me know if there's any issues. Has everybody been successful? Yeah? I must confess I'm not successful. I'm surprised to see this new kind of thing. I just before the session I was logging in into another account and it was showing me the old overview. So do you get the same when you log in? I saw on a couple of screens I saw the trading application. So you open the trading application, right? But you can also log in at or under.com. I mean the trading app is at trade dot like this link, right? Which I have opened here, right? That one I saw already on a couple accounts. And then you should be able to log in also instead of just trade to under.com, which I did before, where you can then go to sign in here on the right hand side with your credentials. Basically the same starting site from which we jumped to the account registration, right? And I was logging in, and then you land at that page, but this doesn't look as it used to look for like years, and not even before I got started with the before. Let me just check. There was the old look, right? Let me just check because I don't know. Does this page look for everybody like this? All right. Happy to have found it here, because now from that page we need to jump not to the trade one, but here you see it under tools, other API. That's the important one. This used to look completely different before, so maybe here and there you might see when you go through maybe one of my older presentations or whatnot, there might be screenshots showing completely different style, different setup here. So they write here, right? Do you like the new version? So here, that's the point under tools up here, tools, API, right? And then you can open that page, and that's the important one that we need with this green button. So I have already my key stored and I use it, but for you probably they're saying something like generate or create. If you haven't done so before, revoke. Yeah, so you have done so already, right? And you now need the this key. That's the like password, like access token, API token that we need in order to get the API and everything else up and running. You should copy this and save it maybe in an editor or wherever you want to save it for the time being, temporarily, because if you lose it, you need to generate a new one. If you lose that one, you need to generate another one, right? So therefore, for the time being, you should save it in a place where you can then copy it from for later usage. And then here in the overview, the second ingredient that we need is the number down here. It's pretty small, so I should maybe zoom in. That's the second major ingredient to access the API. This is something you can always copy from here, but the access token is something you only get shown once. Therefore, you should make sure that you have it available afterwards. So these are basically the two elements that we need in order to create, and I show this now here in the Jupyter Lab. There is in the gist, there is a sample file which is called _.cfg, and this is just a sample version of, it's not zooming in, shedding texture. So I'm making a mix here. And the configuration file is a plain vanilla text file. It doesn't even have to have the .cfg. This is just to indicate that this is for configuration. And the rest of it should look exactly as it looks here, so that we have in square brackets. O&A, you see this is highlighted here in green. Then we have the access token. This should be all written exactly the same. If you want to copy this, go to the gist and you can copy it there and then replace the access token and the account ID. And also make sure that you don't use quotes, for example, or something else. Right?
So through the gist file, how do you define it?
So on the here in the gist. Oh, I might not have. It could be that I haven't. Sorry, it could be. It's a good point. Let me check. I probably, yeah, you're right. I haven't included the config file because this is not a typical one. So I have included in the gist the Markdown, the Jupyter Notebooks, and the Python file. But you're right, not the config file. So, but now it should be there. If you reload the gist, you should now find the config file or the example config file as well. Let me know if it's still missing. I hope not. But I can show you again how it looks. I mean, it's not that much to type. Right? You copy your access token, you copy your account ID from the page. Yeah. Did you find it? Does it work? Yeah. Sounds good. First major step to take part in the markets. Now, yeah, I basically forgot, or I should have mentioned that you find this also here on the next slide. If you have the slide deck open to follow along. I think it should be somehow the same than the little example file. So I call mine wonder.cfg. The underscore for me usually indicates that this is not the real one, it's rather a demo one. So, and when you are here on this slide, you can copy that line. That's the little package that you need in order to make use of the code that follows. So when you copy this and you are then, for example, here on the terminal line, you simply paste it, pip install, git plus the URL of the TPQOA gist. So I have it installed already, but I can, without harm, re-execute it here. It simply says it's all there. And after that, you should have the TPQOA package available. And now I don't know where exactly on your machine you have stored your oanda.cfg file. So this is now something that you would need to know. I'm here in my working directory for today's training. And I have my real credentials. I have stored one level up. Oops, this was a bit too fast. One level up, here is my real credentials file with, of course, the demo account elements, not the real ones. And when I start, for example, IPython, and you can then test here the import, whether this works after the pip install. Oh, you see I'm here. I don't know which environment I have up and running here, but it's Python 3.8. But this shouldn't harm. It could be 9 or 10 as well. And after that, first call will be TPQ away. Then the class is called the same. And we would call wonder.cfg. Again, I don't know where you have saved your file. For me now it would be one level up. And it seems to accept it. If you have a typo or whatever, or too many blanks or double quotes in the config file, this step here might not work. Then you will get an error. Maybe, but if this runs through, it's a good first step. And when I then call, for example, here API, let's get started easily. Instruments, maybe just the first 5. It's now connecting to the platform via the REST API and shows, in this little example, the first few instruments. And if this works, I'm pretty confident that the rest will work as well. I'm not completely sure, but I'm confident that the rest will work as well. Oh, yes, more. You must have good eyes. Yeah. You might not have. Get in slow. We have here. We have Bruce. This could, yeah, no, should be in the system level. But we did this on the system level, not on the platform. Here we go. Does it work for you? Font size 5. Sorry? On which machine are you? On Windows, yeah. It's my home turf. Yeah. There's a Maya Brew install. Maybe it's blocking. It's a company laptop? Yeah. Oh. I mean, if you do all of that, for example, on our com platform, if you want to register, it takes maybe half a minute. I just follow along and do when I come home from my private. Yeah, with company laptops it's always. Ports are blocked, you're not allowed to install things. That's I don't know. It's a prerequisite for training, don't bring your company. In particular, when you want to do software development, I don't know. Most developers find their way around. So they know how to get there. I know this since years. Some company laptops are so closed that there's nothing possible. Others for a bit more things.
Is it that one reason how to
Yeah, you could then fire up Jupyter Lab and could do everything in the browser without installing anything. If you want to do that, so I can show you that. Let me see. I might be logged in. Yeah, I'm logged in already here. So yeah, if you go to simply, let me Sublime. If you want to do it, I mean, it's now an additional step again. Like if you go to pqp.io, this is the page, the landing page for our quant platform, for which you can get a free trial. Registration takes, I don't know, maybe 30 seconds. Just need to choose a username and email address, and then you get an email, and then you can log in, and then you can open Jupyter Lab in the browser where you can do everything. And you can then on the command line do all the steps that we do here, and open Jupyter Notebooks. So if you want to do it, so it's just, I know it's a little bit of a mess, but sorry? No, if you don't have these issues like with Git or whatever, this is not. This was just. I'm going to try to do a workaround. Because on a company level. It's probably not finding the file. This would be my first guess. So you would need to, I mean, I said this is one level up. If this is in your, the slash probably needs to be as well. So just fits in the working directory. Yeah, there is a missing. In that file, it needs to be, I'll show you again. In that file, on the config, this needs to be the first line. And that's what is meant by section headers missing. So there are not that many formal requirements for this file, but that's one that it finds. It's looking for ONA, so the piece of software TPQA is looking for that section through there. Yeah, I'll show you in a second. Does it work now?
Yeah.
Oh, great. Anybody else having any questions, issues? Hopefully. All right. So if this is working, this little piece here that I was executing on, and I saw it executed successfully on other machines as well, then I said that I'm confident that the rest will work for you as well. So that was just the test. Here the disclaimer, please read it carefully before you get into trading contracts for difference. With any type of real money, yeah, please be aware that this is a really, really risky thing. It's comparable to going into the casino, and you saw that the message before, 76.6% of retail accounts are losing money currently there. Now the case studies. Question was, what is the code that we now shall execute? Yeah, the code that I'm now going through that you can download, and if this is working for you, can also execute alongside, is here in the gist. Right, here's the little markdown in the beginning, which has a bit of background, a couple of links that might be of interest in the sense of summaries, also the books that might be relevant. And then there is the first Jupyter Notebook here. If you want to download the gist, you have basically two options. The one is if you are used to working with Git itself, you simply copy here the you copy the link to the gist, and then you type git clone and paste the link. That's the easiest way. Or if you don't want to do that one, you can here, for example, click on download zip, and it will get you the whole gist with all the files also in a single step. But then you need, of course, since it will be a zip file, an archive, it will need to be unzipped before you can use it. So git clone with the link here is the easiest way. Download zip, of course, is an alternative. And once you have done so, your folder, either the cloned one or the unzipped one, should look like this. Right? It's basically replicating then all the files in there. The only file that I have extra here is my update.sh. But this is not relevant for you. This is for me just to easily update the gist itself. So, and then you see up front the first Jupyter Notebook, here the second Jupyter Notebook, and I want to get started here with the first Jupyter Notebook. Which is a case study related to the Medium article that I mentioned before. The 100 lines, less than 100 lines. And the starting point here is basically the same as I was doing on the IPython shell before, just pandas as an additional import. Then I connect here to in the same way, again take care of the location. This might be different for you, either it's in the working directory or you have saved it someplace else. The path must of course be the same. And then, just beyond checking which instruments are there, we can retrieve some historical data. And the method is get history. I'm using here Euro US dollar. You see here 9th of June to 10th of June. This gives me for 1 day. Granularity, this gives the bar length. This M1 means 1 minute. Bars, and the price M stands for the mid price. Could also put in A for ask or B for bid here. When I do this, might take I don't know, close to a second. We are not retrieving here that much data. 1259 data points. You see it starts here at midnight, 9th of June, and goes here until the trading ends on a Friday. This was on Friday, and in Europe it ends on just before 9. We need to be careful with one. I don't know why they are doing this. They have here in the data frame structure with the index, you get basically what is called the left label for the interval, right? So when this says here 2058, it's basically 59 on the right hand side, right? So of the interval, I don't know why this is the way they do the stuff. This would need to be adjusted. For what we are going to do, that's not really relevant, but I just wanted to highlight the point here. So does this work for those who have set it up? So I see a few nods. Great, so happy when we get a few through through the whole process. But I was saying I'm pretty confident if the first commands work, then there should be no problems with what is following now here. So now coming to the first strategy idea, which is a pretty simplistic one, but I like to use this as a warm-up, as a kickoff, if you like. This is about a momentum strategy, and it's not like a typical basket momentum. It's about time series momentum, as it's called, and what we do here is that we work with the log returns of the price series, and then we check for the time series momentum, which is defined here as follows. You see here we take the log returns, then a rolling window over 15 minutes, 13 minutes, 60 minutes, 122 hours, and 2.5 hours, and take the average of it. And we say that the momentum is positive when the average of the summed up log returns is positive, and it's negative when we have the other case. Therefore we take the sign here, right? This gives a +1 when this is positive, this gives a -1 when this is negative. So we have positive or negative momentum. But I think it's clear, right? When you take like 10 trading intervals, whatever this might be, and on average you have a positive return, then it would say, yeah, we have a positive momentum. It's upwards trending. If it's negative, yeah, it's a negative momentum. It's going on average downwards. So here the calculations are simply implemented, and the momentum values, they are basically used. Here I do a bit of a plotting configuration. They are basically used in what follows here as the positions, right? So we say when we have a positive momentum, then I go long. When there is a negative momentum, I go short. So I want to ride the trend. So, it's positive. Yeah, I want to jump on that, right? In the hope that it's going upwards. Of course, you can always come with a contrarian stance and say it's positive, so I go short because I expect it to reverse. Let's say you have a mean reverting quantity that you trade instead of a stock or an index, which you would expect to go upwards on average, for example. And this is what is used down here. So we have the different calculations done over there, and now we use these +1s and -1s and interpret them as our position in the market here in the euro US dollar market, and I multiply the position with the market return. Here I do the shift in order to avoid any type of foresight. So right, I do the calculation, and only after the calculation I can take on the position. And when I've taken on the position, I will earn what is coming afterwards. So I need to, in order to do the multiplication, I need to push the position one step forward. That's the shift 1 that is included in here. And then I do a little bit of chaining of methods, as you can see here, and do the plotting so that we get something like this. And I was not like here doing any data snooping, whatnot. It simply now shows you the different evolutions. It's not, I would say, on average a great strategy, but if you take, for example, another day for the data, this might be different. I just wanted to show this here in a very simple context, and since this is the background, the stuff that is discussed in the article, if you want to read more. We can also go and change here simply the days and see what's happening. So we have 15, we can go, for example, to yesterday, right? Take yesterday's price data. This is now a little bit longer because it's not a Friday, right? This is now 24 hours. On Friday it was just 21 hours. So therefore this data set is a bit longer than the original one. And with that data, some of the strategies now look a bit more appealing, but we need to be careful. Have a look on the left-hand side. This is not like a huge gain for that strategy. You see this is just like a +0.08%. no, not 0.8, it's 0.8%. So this will be 1%. That's 1%. The red one here, the longer one, this is actually losing money, and that one, the 2-hour one, seems to be the best here. So that's now a bit of data snooping. This day gives better results, so we might stick to these results to make us happy. Right? Of course, this is when people say, yeah, I want to deploy it, I want to here, I want to there. That's the hard part. So most of the things that you find, let's say in our program, in the classes that we teach, that are in the books, etc., or that I present here, that's all very simplistic to get the process from A to Z. But overall, this strategy research, this simply assumes that I'm doing this and then I move on. But this is, of course, where the big hedge funds employ dozens or hundreds of people that do the research, that work all day long to find an edge in the market, check it for capacity, etc., pp, right, in order to get a feel, A, does it make sense, and B, they get started then small, and C, afterwards, if there is a bit of success, then they scale it with the help of the systems teams, the back-end team, etc. So here, that's the hard part. Once you have the right strategy, deployment, I wouldn't say is not that easy, but once you have the strategy deployment for many strategies, or at least for many types of strategies, we can say is then not that hard. So now the trading code. Let's have a quick look at the on success method, because this is something that is important for what is following. In the class TPQA, we have this method on success, and this is the one that we are going to use afterwards in order to run this very simplistic strategy. Right, so here I've put this first because when I now execute the next line, whenever there is a new data point for euro yes dollar and it stops after 10 data points, it will call this method, and this method prints time, bid and ask. That's what it does, and we see it here executed, and we are now in the real-time business, although this doesn't seem to be going too fast, but now it's moving, right, and we get our bid ask prices here for the current time where we are, at which we are, and after 10 data points it stops. You can stream also other ones like BCO, which would be print crude. You will be interested in that, maybe. With a paper trading account, you have by default, I think it's still the case, 100,000 available to risk, and you can reset it afterwards. Right? So that's risk-free if you like, or you might go with Bitcoin, US dollar, for example. Here you see the crypto space action is usually a little bit higher. Yeah, we can stream data. That's important. We need to get real-time information in order to do algorithmic trading. That's here possible via the API as well. So that's good. Maybe I'll reset this here to euro yes dollar. And of course, if we want to trade, we need to be able to execute trades. So retrieving historical data, doing backtest, wonderful. This is all in the past, if you like. Streaming, it's now and here, but acting based on what we receive from such a stream, that's of course important, and you see that's pretty straightforward. And I'm logged in here in my demo account, and you see, like you have it open as well, I saw it before, there is no active position. Here it's just showing euro yes dollar 1 minute bars. I might go to, let's say, 5 seconds. Which is then moving on the right hand side a little bit faster, because now every bar is 1 minute bar, and you see my bars here are Heike Nashi, they are not open, high, low, close, regular ones. but no trades. That's the thing that I wanted to highlight here. And going back to the code, when I create the order, euro, yes, dollar, units 1000. If you see this JSON object here, JSON, as many say, JSON object, you get quite a bunch of information. Price at which it was executed, that's of course is a market order. There are no limits or whatnot defined. Here you see that's a market order. P&L, when you open it, is obviously 0. The commissions or bid-ask spread, etc. Here is the half spread cost. They are accounted for a bit later. But what I want to check now, indeed, I have my first position. 1000 was the order that I created, and this is now shown here. The account has a leverage of 30. So 1000 units, not that much. It's just like 33.3 euro that I need to put down in order to open the position. But this is anyways paper money, so no need to discuss that aspect here. Right? So I might close these maybe. So let me maybe leave that one here. So the trade has been placed, and when I now want to, let's say I want to just close half the position, I can go with minus 500. So this would not close, as the comment says now, the complete position, but rather half of the position. I get my JSON object, let's check. Yeah, it's just 500 left. And I could now, if I like to, manually close it, but I want to do it programmatically, and I repeat this here for a second time, and then the position is closed. So that's not yet algorithmic trading. That was still manual trading. It was not via the GUI, it was via the API. And that's what we need in order to automate things. And that's what the next step is about. Simple deployment. This now presents a class called Momentum Trader, which in principle combines the ideas from before to some extent, but also introduces now, for the first time, the algo itself. So this is what we would call, or what people call in computer science, an online algorithm. What we have implemented before was all an offline algorithm, and not online in a sense that we are now connecting to something. It's an algorithm that is able to process data as it comes, versus like our historical data, and we can drink a coffee, right, and wait a bit and do here. This now needs to happen in real time. And when we go through this, it inherits from the TPQOA class. I define a few additional instance attributes, and this is now the on-success method from before, but of course with a completely different content, with a completely different code base. Before it was one of the most simple that we could come up with, namely just to print the time, to print bid and ask. That was it. Now we do a bit more sophisticated stuff with it, namely we implement the trading logic for our simple momentum trader. And to this end, let's quickly go through this. We collect here bid ask, we calculate the mid price, we do a time stamping, and then we concatenate, which means we collect, we add to the data frame, which was defined here as an empty data frame, we add every tick data set that we retrieve from the API, so that we build our own tick data frame. Then we resample the tick data to 5-second intervals. Here I do my right labeling, which is important. I emphasized before what we get from the API is a little bit different. Calculate the lock returns, calculate the momentum values, which we use obviously as our signal now to drop an A. And when we here, it's simply defining the minimum length, right? So the minimum length from which onwards we can get started trading is momentum plus 1. So if we have a 5-second interval, and let's say we want to trade with a 10 interval momentum, then we need to have, with this approach, which is, I would say it's not the best in the world. I show you some other approach later on, but this is how it is implemented here. We need to have a minimum number of bars in order to calculate the momentum, in order to be able to generate the signal on which we can trade. And then we increase here the minimum length so that it only checks, again, the rest of the code when there is a new bar, if you like, a new 5-second bar. How I define momentum? Yeah, I explained it maybe too quickly before. Momentum here is what is called time series momentum. So we take, this is the place here where it is written out explicitly. We take the returns, we take a rolling window here, like 10, 20, 30, and then take the average. So it's just based on this one time series. I would say still in asset management trading, momentum is more often than not used in the context of baskets, right? Where I say the winners are getting, we are going short, the losers, we are going long, right? Or whatever the reasoning is behind what you want to trade. And here we simply focus on the one time series and say if there is over a certain time interval, an average return that is positive, we want to go long. If it's negative, you want to go short. So we want to ride the trend that we see in the market. That's the definition. And this translates now in this, what I call the online algorithm. But here we need to obviously collect the tick data, build our own data set, and from a certain point on, we can do the same calculation. But this time now, it is not on our original 1-minute bars. This time, just in order to make this a little bit faster, I do it on 5-second bars. So otherwise, we will need to wait. With that approach, we would need to wait too long. So, and then we check here for the momentum itself. If it is positive and we are neutral or short, then we go long. And here, I think we need to, and if the momentum is negative and we are neutral or long, then we go short. So here it's printing out. You see it here going long, going short. We create the order accordingly, right? And here this 1 plus is simply due to the fact that if you want to trade, let's say, 1,000 units, like an example before, if we go long 1,000 and then want to go short, we need to sell 1,000 and sell another 1,000 in order to be short. So the first trade will be 1,000, then 2,000, 2,000, 2,000 until the last trade where we close whatever position is open for the last trade. And this is why in this code you see here 1 plus self position. So this is a tiny little technical trick in order to make this in a single step. Technically with the platform, it will of course first close the long position and then go short. But we simply say, well, that's one step. And we can do it in one order. Indeed, this is what we can do here. And accordingly, you see it is the last line here, the positions are adjusted. We always start at position of 0, neutral. We want to trade 10,000 here, and then we change between long and short, or short and long, depending on what the first signal is. So that's the little class, and the core, as I was highlighting before, is this on success class, which we override compared to the original implementation, which was just the printout. Here again, the credentials play obviously a role in order to connect to the API, and I say after 150 ticks, that's a hard stop here. I want to stop the trading, executing now these two cells. you see it's collecting the ticks, and from a certain point on, when we meet this condition here, and only then, it checks for the trading logic. Right? Before that, it's just collecting, preparing, collecting. Just depending on the number of ticks that we get, this might be a little bit faster or might be a little bit slower. Now it has opened the first position. Obviously, we see it here based on what is happening. The first signal was to go short, and now it collects further and further. Two things can happen now. Either the signal stays the same, then no trade takes place, or the signal changes to positive, then it would go long, close the short position. This is what it has done here. And we see for the first time now here also the realized P&L, right? And so it will have reached 150 shortly. 150 is arbitrary, right? This is not like, oh, it has done another trade just before that. Like four ticks before the end, it has changed the position. But this is also why I like this example, because you see quick results, right? You can sit in front of an algo for like days on end and nothing might happen, depending on the strategy and what you do. So here again, we have lost quite a bit of money, but this is also due to incorporating transaction costs now. With the backtest, etc., and often when you see stuff like that presented, I do that as well. Simplifying assumption, there are no transaction costs. But now, when you get started trading, obviously you need to deal with transaction costs, and they are here in the form of the difference between the bid and ask, which is the tiny little margin based on which platforms like Wanda make their living. Of course, this is all paper trading. Here, they don't make a living out of that. This is just to lure you into the real accounts. And as I was pointing out before, the first and the last trade, they are like, quote unquote, the small ones. And here we have the larger ones. The first opening was minus 10,000, and the last one is plus 10,000. That we closed the position, which was still open there. You see account balance, right? Here I'm just printing out, where are we? Just printing out here the last transaction, and I use pretty print for the formatting of this JSON object. Of course, this makes reading a bit more easy than the stuff that we see here, right? This is the unstructured, the non-pretty print, and here we have the pretty print version, which gives you the structure. That's the account balance, account ID here of my account, and units traded, realized P&L, all the information that might be relevant here. The price at which it was executed, etc. PP. Also the spread costs that are now incorporated. For those of you who have managed to set up an account, does it work? Did it run through? All worked. If so, that's great. Again, that's already the major milestone. We have now the first algo executed, albeit just for a couple of ticks here, not running that long, but this wasn't the intention here to let this run for hours on end, which brings in and of itself other issues with it, because dealing with socket streaming, real-time APIs, is not the easiest thing. What do you do if a connection breaks, etc.? So in a production setup, there are many technical issues. That's what I wanted to emphasize, that come on top of just writing a little bit of code, which then interacts and implements the algorithm. But nevertheless, I would say that's algorithmic trading. It's an algorithm that trades. The algorithm decides which position to take on, what trade to place, and it's doing it without any human interference, help, or whatnot. So that's the simple strategy. Then we had in the title something like AI-powered algorithmic trading. And this is now the next Jupyter Notebook, which has basically the same setup, the same frame, but it now uses an AI-powered strategy. So AI might sound these days here a little bit far-fetched, but we use at least machine learning. Or deep learning, or whatever you want to use in this context to generate the signals, instead of something as old-fashioned and traditional as the momentum, time series momentum strategy. So the API connection, including the customization here, configuration, nothing new here. That's the important part. Without API connection, no data to retrieve. No trades to be placed, no real-time stream to be retrieved, right? Therefore here now, this is now based on BCO, Brent crude oil. Maybe since I've changed the other one, let me change that as well. Here 6 was okay. Let me go to 14 and 15. So I did this in the other notebook, so let's update as well. So what was the one?
Start.
That's some. Oh yeah. Thank you. Set parser error. Yeah. Thank you. 0 too many. So we get now on a 5-second bar level. Before we retrieve historical data, 1 minute bar on a 1 minute bar level. Here's now 5 seconds, of course, due to the nature of how this works. We are getting much more data for a single day now. It's 22 hours. Right? So not every instrument on Wanda is traded 24/5, let's say. Like a day like yesterday, Euro US dollar was traded 24 hours here, BCO not. But still we get 11,000 plus data points. And again, I want to emphasize, we are dealing here with a free, full-fledged demo account from which you get all this data. Right? Depending on other data sets that you might be interested in, this can already mean on that level that the costs might be significant, depending on the source, depending on the data itself. Here you get it even via the demo account for free. So the strategy now I go with to get started with 3 legs. And what am I going to do? What I want to mimic here is something that so many day traders still do. Namely that they have a look at bars, or even more general, at the history of what was happening in the markets, and try to conclude from the history what might be happening in the future. So that's it. I think I cannot say it in more generality, right? They have a look here at the price formation. They might add, I have here just for my later example, and I now slow it down a little bit. It's now, for my taste, moving a bit too fast to 1 minute bars. And what people do, either they look at typical chart patterns, right? Everybody knows about chart patterns, right? Trading patterns, right? Stuff like what is that now? What was happening here? Is this? Oh, maybe I'm not allowed. In Germany, I can access that. I just recently used that example. I mean, this is enough, right, to make the point. So people look at patterns like these, like head and shoulders, triangles, bullish, bearish, flags, pennant, double bottom, whatever, right? So that they might figure out that formation means the market goes further down. Or they use statistical indicators here, like simple moving averages, right? If the faster simple moving average is above the slower simple moving average, then I want to be long. And here you see kind of good proof. That's a nice signal here, right? There's the crossover, and then the price here, euro US dollar, is indeed increasing afterwards. Right here, it's a little bit too late to go out, but this might have been, I mean, it's not a large movement. We always need to have a look here at what is happening. This might be good enough to earn the transaction costs, or it might not be, but I just wanted to say that's a typical approach. People look at the past and try to judge what might be happening in the future by whatever means. I can add now other more sophisticated indicators like RSI, for example, and I get more indicators. I can combine 7 into 1 and then might come up with insights about what is happening. And that's exactly the same idea that I want to implement here with machine learning. That I say, well, we have the time series data. Of course, we are not working now with any visual representation, but we have the time series data. We derive the log returns out of that. And now let's have a look at the history of the log returns. In that sense, it is similar to the momentum one, where we said, well, take the last 30 return values, get me the average, and then I say, well, long or short. In that sense, it's the same. But how we come up now with prediction is different. We take now here just 3. We can easily increase that to 13 or 30, right? Log returns, I lag the data, and then I try to predict via machine learning, time series prediction, the next step. So momentum is pretty simple, it's just the average, right? Nothing more. Indeed, a simplistic algorithm. Here I now lag the data in the form of my log returns, just calculated, right? And I want to learn from the historical log returns here the next intervals directional movement. That's what D is about. So D is about the directional movement. Now in machine learning lingo, we have 3 features here, and this is the 3 features are the historical returns. The previous, I mean, historical here means like the last 5 seconds. The last 3 5-second bars to be correct. But nevertheless, that's history, right? That's in the books. And we want to try to learn how to predict the next interval's movement. We are not interested whether this is a large movement or a small movement. We are just interested in +1 or -1. And in that sense, we have 3 features. And we have 1 label column. Label column is binary, +1 or -1. And the features are floating point values here. So pretty easy and straightforward. We do a train test split. Here do normalization. Normalization in the sense of Z-score, Gaussian normalization, so that we end up with an average of 0 and a standard deviation of 1, which is known to be good for deep neural networks. I use here MLP classifier from scikit-learn. Pretty small model, just 1 hidden layer, 24 hidden units. I fit now the normalized features, just the 3 columns, the 3 features, and the binary labels column. The accuracy score here, it's pretty low. But we must be sure about one thing in the markets. Accuracy is just one side of the coin. And you can have a pretty decent accuracy with regard to financial return or market movement prediction. What is important in financial markets is that you get the large movements correct, right? The music plays in the tails, as they say. So when you have a look at the return distribution for financial time series, you always have high peaks, and regularly you have fat tails. So high peaks around zero means that so many movements are so close to zero that even if you get all of them right, this is not what will make you money. This will actually lose you money because you trade too often if there are changes. But the tails, when you get the market crashes and the jumps after positive announcements, right? Nvidia has like new quarterly results to present that are well beyond expectation, right? This is where you get your returns from. So I don't know if it makes sense. Let me just, now that I was talking about data-driven finance, let me see how the distribution looks here. That's pretty rough, but we might be able to dive into that. Right, and this is what I meant here. So that's 0, 0, 0. I mean, this is a pretty short time interval. You see here the scaling, right? But almost everything is here pretty close to zero, right? This really high peak thing. So we need to get the tail ends correct in order to make money. Therefore, this is not, if you like, an excuse, but it's I think a very important insight, and I've prepared recently a couple of notebooks showing this in, I think, impressive form, this particular aspect. But an accuracy of 44%, if you get all the large movements right with a 44%, that's great, right? If the 44% are related to those around zero, or if you have 60%, that's the better way to put it. If you have 60% accuracy and it's just about those close to zero, you can't really make any money. Here on a 5-second bar level, it's anyways a difficult discussion when we incorporate transaction costs. So now testing the model, accuracy score even a little bit lower, and here you see it's not kind of like the best thing in the world, but excluding transaction costs, and as you will find it in many financial papers, right, in a perfect market, no transaction costs and everything in real time, and we can do everything like we want, if you like. You see that this I would say pretty dumb somehow strategy that we use here, nevertheless is better than what over the test period, which is 20% of the rest. So it outperforms it at least. With transaction costs, it would go to the ground pretty fast. So we have one major example. I want to, because I was with the strategy, one major parameter, let's say, that we can change. So 3 lags is not that much. So let's maybe go with 7 lags just for the sake of having another example with everything else being equal. Accuracy here goes a little bit higher, right? I mean, this is the same chart as before. Here doesn't seem to make that much of a difference, right?
What are you
But
what are you comparing there, the two models, or?
Here this is like the passive benchmark investment. So if you just would go long, right? That's what the market returns. It loses a little bit, right? This is very short period of time, and you know, and here this is what the strategy, without incorporating any transaction costs or whatnot, would get you here. The prediction-based strategy. This is comparable to the chart what we had here, right? This is about the momentum-based strategy. So the momentum one here looks even a bit better on the 1-minute bars, right? Yeah, that's maybe, let's go final one also for the deployment, maybe with 5, just a quick run through with 5, because this is really here the major, it's not the only parameter, but obviously it's a major parameter to say whether we have a 3, 5, or 7 features that we want to base this on. And with 5 now you see that this is getting worse. So I might stick to my 3 from before. The fewer the better, as at least a rule of thumb. Or let me re-execute this once from here so that I have a new numbering. So The rest here, BCO USD, is just replaced in the code from before for the Euro US dollar. It's the very same. I said that's the very same structure. We now are just concerned with another strategy. So we used to do this before with a momentum one, and now we do it with a machine learning deep. It's not a deep neural network, it's just 24 hidden units, not more. And we can now deploy the strategy as well. So here, the structure of that method is again the same, but of course the core changes here. The prediction. You see, for this to work now, we need the fitted model. Right. So the model is here, up here. Right. I pass in the model that I was fitting before, so that I can now use it. What I'm not doing, in theory, we could do that as well. We could always retrain the model to update it also in online fashion, or let's say every 10 intervals or every hour or whatnot. This would work, but here I have the model, I have fitted it until, I don't know, last night, and now I use it for training during the day. Then I would retrain it tonight and would use it on the next day for training. So that's here. The core difference, obviously, it's a different algorithm. I have now a machine learning model, which we have trained before, and this is at the core of the prediction, and we now going to trade, and I can later on, when we have the first trade, I can then change to the trade API, and this is also here for 150. Oh, this was quite a bit faster because right here for the 5-second bars, we don't need more here. So the first trade was short. I said I'm going to show it, and indeed here in my, can close that one. It's now BCO USD. I can change the instrument so that we get here the data as well, and this is now trading on 5-second bars here. Right. This is going pretty flat here over that period, so might not be the best period, though this would be a good trade. Again, these are more in the tails. This is all around the zero, more or less around the zero returns, right? 100 short, and we can now check here. So it's here, it is giving out every time the signal, and you see, given the data it observes, the calculations that we do, it is here showing the signals throughout, and when the signal is the same as before, it doesn't change the position. I think that's obvious. So simple technical momentum strategy. There's also momentum indicators here with a slightly different definition if you want to relate all of this to the technical trading, right? Momentum here over 10 periods, right? Might be differently defined, so we would need to check here the definition with O&A, how they define the momentum indicator, but overall that's basically the same, right? You see here the zero line, that's the one here, and the momentum here is positive or slightly negative, right? So also this is something they defined here. What you don't or can't really implement here in the visual interface trading application is what we have now implemented with the second Jupyter Notebook, that we say, well, we have a traditional machine learning based approach where we have a look at historical returns data, fit a deep neural network or whatever network we want to use, or whatever machine learning algorithm here for classification. There are of course many more than the one that we used, and then you implement this in automatic fashion on that level in the same way, basically.
Question. This -1 is the position, right? And sometimes it sort of recalculates it after 1 or 2 data.
Yeah, this depends on how fast the ticks are coming in. So it's not the ticks are not coming in at homogeneous time intervals sometimes, and depending on the day time of the day, you will get many ticks, and sometimes you get fewer ticks. So the instruments, when you have a look at, in Europe, for example, here, or there is primarily Europe, UK, Europe. When you have a look at it during certain times, you might even have 5, 10, 30-second intervals with maybe one tick or no tick at all, right? If there is no action taking place. And sometimes during the main trading hours, right, you will have many ticks coming. You have seen it, or you might recall it before when I was showing Euro, US dollar, BCO, and then Bitcoin prices, where Bitcoin was streaming much faster. So we get.
So it's a fixed physical time, and how many ticks you get into 1 second?
Yeah, it's not, the number of ticks is not fixed. So that's variable. Let's say for 1 minute, let's think of 1 minute. You might get,
This 1 minute, there could be different number.
there could be 10 ticks, there could be 30 ticks, or sometimes just 2 ticks, let's say, depending on the instrument and the time of the day. And there are hours where you get no ticks. This is what I was saying before with regard to BCO. You saw there was between 10 and midnight. There's no trading taking place. So, right? So that's. But here it doesn't change. Maybe, that's due to the fact. I think currently the market here with BCO is pretty. That's so flat. It simply sticks to the same position. Right? There's nothing really happening here. So this will be my non-machine learning based interpretation. We do here. Yeah, you also see this takes much longer than the example from before. So this is now, I don't know, like 4 times as long as the Euro US dollar example from before. But anyways, this will now simply close, I would guess, the position that it opened. So with that algorithm, not that much has happened here, although we were going with relatively short intervals. So last but not least, I've said this is all pretty simplistic. So the structure of the on-success method here, the structure of the on-success method here is basically the same. What's the major difference is that the signal is simply generated based on a different algorithm. Here we have one calculation, and in the other part we have the model which was fitted before and which we now use to implement the prediction. If you want to deploy strategies, let's say, in a bit more of a professional, which means more robust, more reliable way, first and foremost, you probably wouldn't like to run it out of a Jupyter notebook. Second, you probably don't want to run it on a local machine because there can be whatever can happen, right? You need to run because there's an emergency. Take your notebook, everything breaks down. Or there might be some fire when you have left, or whatever, right? So you would probably put it into a cloud instance. We use usually, or in general, I can say, DigitalOcean, where you get cloud instances which can do such simple processing when you just pay like $4 per month, right? So these days, I think there's no excuse anymore to run algos locally. It has become so simple and cheap to run them in the cloud. And third, you might want to have probably a bit more of an infrastructure, and this is the final part where I cannot go into any of the details that might be interesting there. But in the gist, you find a couple of files here. That's the first one, that's the core one. This is called processor.py. This is a file about processing data, transactions, signals. Here I'm just scrolling down, I'm not explaining here. Signals and handling signals, right? In a bit more of a, I would say robust, better, reliable way. Then you have another file in there, which is called model.py. This is a very simple file. This has just some helper objects for the other ones, right? So here's a class prediction, which is the enum, class signal, right? And they are used in other contexts. So for example, now I'm just like looking and not finding it here. You will find these used in the other scripts, modules, Python modules. Then you have a base class, which is about a base trading class, and that's the longest one here. So this gives what you can call a strategy template, where you have a couple of helper functions in the beginning, and then here you see base strategy. And you see this in turn is defined as an ABC meta class here. And this gives a bit more of a structured, reliable, flexible, powerful, however you want to put it, base model framework class to define your own strategy. So this is, if you like, a boiled down version, a very small, tiny sandbox version of our own trading platform, right? So what we use, but on a larger level with logging and whatever is happening there. So even if you don't fully want to go through the code or want to even try to understand what's going on, you can simply use this more or less like you would import another package, NumPy and Pandas. I think not everybody is looking always behind the scenes of what is going on. With Pandas, when you call method X, Y, that, you use it, right? In that sense, you can do that, but here you have it as open source and you can have a look at it as well. So based on that, and that's now the core message, the first three are about a bit of an infrastructure, processing data. This will run as a separate thread, then some model-related definitions, then the base strategy class, and here I'm now defining a simple moving average class, which, given that this inherits from the base strategy class, has quite a few tricks under its sleeves. But of course, if you want to come up with a specific strategy, that's now the third strategy for today, momentum, machine learning-based prediction, based on classification. Now also one of the most traditional ones. So here we have the traditional idea that whenever we have a fast, let me pull up the visualization here, and let me close these things here, right? So whenever we have, this is going on the 1 minute bar level with euro, US dollar, euro, US dollar. Right, so this is now the implementation of the strategy. We have our candles here and a 3 minute simple minute. This is minute bar, it will be minute bar afterwards as well. 3 minute simple moving average and a 10 minute simple moving average. And here again, what we have seen already before, the idea is when the faster the shorter one crosses from below, this will be a buy, a long signal, in the idea that this indicates a positive outbreak or uptrend, and here indeed this looks exactly what the reasoning is behind that, right? So here it's a long signal and we go long here as well, right? So there's the crossover and the market goes up. There's the other crossover and the market goes down. Crossover, market goes up, goes down, goes up. Here, I should make a screenshot of that because this is hardly ever you see it in that pure form, that it really fits the data. The problem is that the movement, again, we need to always have the scale inside. The movements are pretty small. Even if you get all these movements correct, for something like this here, you cannot earn the transaction cost back, right? This is tiny little stuff, but the reasoning behind it still is valid. And indeed, I will do a screenshot of that one here. So, because this is in its purest form. But I'm happy that it's not always that you see it like that. So, having said that, this is the reasoning. SMA1 above SMA2, right? But this is just the init part. So custom data preparation, we need to calculate SMA1, SMA2, like we calculated the momentum before. Then we do the prediction, including shift here, right? Do the prediction, go long and short, depending on what we have in terms of the relationship between the two. Now the on-signal method, this is now pretty simple. And you see this, now all is pretty simple given that we have the base strategy class, which gives everything else that is required. Now we simply have two cases. Either the direction that we get here from the predicted data is -1, then we go short. And that's the signal that is processed from the processor later on. And here, prediction can only be long if it's not short. And the processor takes care of what is the position that we are in, etc. So everything, more or less everything, is taken care of in the base files, classes, code that we have. And here it's then kind of simple to create your strategy. I mean, the SMA-based one is simple, but even a prediction-based one would have maybe, I don't know, 1, 2, 3 lines more of code. And then last but not least, here is the deployment script. This is the one that's getting executed afterwards. So we use threading so that the processor is always running. The processor is taking care of data and doing here of transactions and placing orders, getting signals, etc. Right? So this is running like the clockwork, hopefully. And the rest here is about the definition for the strategy itself. So only here we need to define what instrument we want to trade, what is the frequency. So this doesn't go below, currently it doesn't go below 1 minute, bars. Then the trading quantity, 10,000, numbers of signals to generate. This is like the stop parameter from before, 150 ticks. Here it's just 10 1-minute bars. It's an artificial stop in order to have this not running for ages. And this is the 3 and a 10-minute configuration that I was showing in the chart, right? So here the 3 and 10-minute configuration, 1-minute bars, euro, yes, dollar, 3, 10-minute. That's now the visual representation, if you like. There's another signal on the horizon here. The visual representation of what we have written down here in that part. And the rest is now just 4 lines of code, where the first line here, threading, starts the signal processor with a config file, right? We need to connect to the API like we did before. And here it is called with listen to signal. So this is running, and it listens via the queue to every signal that is put in the queue. If there is a change from short to long, it will act accordingly. From long to short, it will act accordingly, etc. And the strategy here itself, you see, it's the SMA one, right? That's the SMA strategy, which is defined here based on the base strategy. That's that part with the just defined model parameters. So in principle, we could have defined this in another place, but I think it belongs to the deployment part. Also with the configuration file passed through here, and then the strategy is supposed to generate the signal so that when this is starting to run, it will then pass signals into the queue, processor is listening, and the machinery is supposed to run. Yeah, that's a little bit more of a robust and yeah, I would say deployable setup. It's not probably the end of what you might expect or what you might want to have, like logging, other monitoring, and maybe some more features. But at least we should be able to, maybe I don't have some open, I can do it here. It's not a big deal. Let me exit. I'm here in the right folder, and I can run Python. Yeah, deployment. Right. So it's generating or retrieving data, and it has placed already the first trade here at the price that we see here, 0.0. And I have set one parameter to trade immediately. That was that one. I jumped over that. So this is just for us to get started with trading immediately. Otherwise, it would wait until the interval is until the next interval opens, right? So it would wait until the next minute, processes the data, and then opens the position. So here I've set it to trade immediately true. And it's trading, so it has then every minute now basically it sleeps for as long, right, as it has time, and then it retrieves new data, updates the signal, process the signal. If there's something to do, it trades. If not, it sleeps, waits, and so it goes on and on. So here it has opened. We have seen the first position, 10,000, etc. Right? And here it's also a little bit of output. Expected candles are 30. I got 30 candles, and the realized P&L, something that a trading platform like one that doesn't take care of in general. Here is indeed the cumulative P&L. So I don't know how the signals will go afterwards, if there will be trades or not. But if there are, let's say, over the course of 6 hours during the day, you have placed like 20 trades, you will see here in the realized P&L, you will see the cumulative P&L. Before, all the P&L numbers that we have seen, there were messages from the platform, and they were for this trade alone. So for a single trade. But of course, when you trade a strategy, you're not only interested in the single ones, but you're rather interested, what is my P&L over the course of the day, over the course of the week, over the course of a month, or however, wherever, whenever you want to deploy it, right? Yeah, that is that part. Again, you have the code, you can use it, you can go through it, you can comment on it, send me an email or whatever. I hope this was a start for you, maybe to explore a little bit further the exciting world of algorithmic trading. So we have been teaching this, doing this, developing around this for quite a few years. I said it already, the AI machine, you saw a screenshot. What comes on top of everything that we have discussed is of course manifold, right? You might not be trading just with technical rules, you might want to apply other statistical methods, machine deep learning, automated ML is something that we have integrated. Deployment and execution, we have now gone with the scripts that I've shown a few steps further, right? Data streaming, you need to stream transactions, that's a different stream. You might want to manage your positions, right? Do you immediately go in 100%, or you get started when the signal comes with 50% and then increase to 100% or decrease when certain things happen? Profit and loss, what I was highlighting here, it's cumulative. You want to see and calculate correctly. You want to maybe visualize things, so visualization wasn't now a big part. Right? You want to log, report, that's deployment execution. And then this is something where we have spent a ton of time, and this is beyond the signals. There are so many things that need to be decided. Entry, when to entry, what about stop loss, trading stop loss? We have implemented something like a dynamic stop loss, where we, given certain things happen, we dynamically adjust the trading stop loss. I mean, the trading stop loss adjusts itself, new highs and new lows. But you can, of course, cancel the trading stop loss order and place new trading stop loss orders algorithmically. Take profit the same, position sizing. We have also implemented things like dynamic sizing of the position, where we have reached the first profit target, close out 20%, adjust the trading stop loss to X. Next 30% after 2 additional percentage points, etc. Capital allocation. So it's quite a bit of stuff that comes on top of that. And there must be a reason why the big hedge funds and the big systematic trading firms out there employ hundreds of people and have millions of IT budget. Right? This is no surprise, but I still think it's fascinating that for some of you, thankfully, within a few hours, 2 hours today, you get started, you open your account, you install a few things, you configure a couple of things, and you can trade, and you see your trades placed in real time here, follow along what is happening. I still find this amazing compared to what my experience was back in the days, reading printed financial newspapers, going to the library and climbing the high shelves to get a paper out of the shelf, right? So times have changed quite a lot, and I find it really exciting. I hope you find it too. And if you like to, you can maybe drop me a line in the future what your experience have been afterwards. In that sense, happy algo trading, right? See you soon. Thank you. Thanks a lot.
Thank you, Dr. Reed, for that session. And thank you all for joining us.